when I discovered how seamless and fast and cheap that process was, I said to him, we should start a global Venmo. He was like, oh, why are you the money now?
What does it mean to be live in 120 countries?
The product is truly global, and you have to actually put work in to restrict where it's available. So we don't want to be available in Venezuela.
Does that become a competitive edge? This is Money Code. It's a show where we decode stablecoins and programmable money. I'm Chuk, Okpalugo.
And I'm Parekh. And today we're joined by Mike Hudack, co-founder and CEO of Sling Money. Mike, you've led product teams at Facebook, Deliveroo, Monzo. Can you break down what those experiences have taught you about why moving money is still so hard? And how is Sling approaching it differently?
Well, the honest answer is I don't know why moving money is so hard for so many people. It doesn't make sense to me. I knew why it was like that 10 years ago, and the way that I would describe it now is that money didn't fully digitize or it didn't become an internet good. So, back in the old days, you would only have physical money and you'd have to carry it somewhere. And then, eventually you got to the point where you could send it with Western Union with a message over some wires, and there would be physical cash at the other end, and they'd give it to them. They'd collect it here and collect it there, and they'd provide that service. When money was digitized and banks went online, they all started running their own databases for money and their own ledgers, and you would have these compatibility layers in between all the bank ledgers, SWIFT, faster payments in the UK, ACH in the US, and many of those are kind of slow and not that good within a country, although that has gotten a lot better over the last few years, and they're pretty poor internationally. So that's why moving money has historically been hard. And we can also talk about, compliance and fincrime and all these things, which also are real impediments to having a really seamless instant financial system around the world. What stablecoins do is they give everybody a shared database. And where they don't have a shared database, they provide a much, much better interoperability layer between those databases. So, I might use Solana, you might use Ethereum or whatever, but there's really good compatibility between those two things. And when you're on the same chain, it's all the same database. It doesn't matter where you are in the world or what kind of asset you're holding. So that's the problem, and I think that's the solution.
Yeah. It's funny, when you break it down as simply as that, it's surprising why sometimes it's such a confusing topic, and there are many, many layers deeper. But we talk about a distributed ledger. It's like, okay, what distributed ledger? What does that even mean? And it's like, well, banks have their own ledgers. Okay, banks have their own records, and each bank has their different record. And because everyone has a different record, you've got to reconcile, and also you've got to check this compliance, like you mentioned, and we'll come on to that later. But really, it's as you said, we're just connecting everybody so that everyone's on the same record, and then magic happens. And we can talk about how much faster things are and how much more automated things are, but I really like that explanation. I'm from the UK, used faster payments came 10 years ago, 15 years ago, and the idea to send money to a friend just using their bank details was instant. And so to me, great, that happened. Came over to the US, and that wasn't a thing. And then you had this app called Venmo. That was kind of the equivalent. It wasn't a bank account, but you just send it to a person. And I was just thinking to myself, why isn't there a global Venmo? I wish there was a global Venmo. And so when blockchains kind of came about, and I was like, this is possible. It's now possible to move dollars on the blockchain. And then I was doing some research and I came across you guys.
Yeah, Venmo was started by a good friend of mine, actually. I remember the first time that I used it, it was on the street in New York. And I don't remember who was buying the beers. I think I went in and bought the beers, and my buddy Andrew texted me $5 for his beer. I was like, no, I got it. And he was like, no, take it. And it was my first exposure to Venmo. It was brand new at the time. And Venmo has a really big part in Sling's origin story, which is that when I first moved USDC from the UK to California, it was going to a friend of mine who wrote the first check into Venmo, and was friends with everybody involved too. And when I discovered how seamless and fast and cheap that process was, I said to him, we should start a global Venmo. And he was like, oh, why are you the money now? I was like, wait, let me do some work. But it's exactly the right analogy, or at least for where we started. Yeah.
Right. I think that's great. It's you need that international experience, and then the difference to see that moment, that light bulb moment. And I guess that's a great moment to kind of step back and say, okay, then that conversation did lead to Sling. So let's talk about Sling. What is Sling? How does it work? Maybe you go through like the flow for a customer end to end, ramps, cash out, spend. What's different to what people think about regular apps today?
Sling's available in like 120 countries, and you can sign up very quickly. We verify your phone number. You do IDV, so we do IDV in a bunch of places. We might ask you a few KYC questions, and then you get dropped into what is actually like a really easy to use self-custodial Solana wallet, although we don't talk about it in those terms to users. And from there, yeah, you can very quickly and easily add money with whatever the local payment method is. So in about 100 of those countries. So you can do it with a debit card, you can do it with M-Pesa, you can do it with FPS, you can do it with SEPA, you can do it with PIX, all that sort of thing. And then now we also give you a bunch of account details, so you can get a U.S. Account number and routing number. You can get a European IBAN. You can get a Mexican clave. Very soon you'll be able to get an account number and sort code for FPS to receive pounds. And so wherever you are in the world, it's now very, very easy to add money or get paid by somebody. So maybe if you're in Indonesia or Argentina or whatever, and you're working for an American company or a Spanish company, you can now get your paycheck into Sling, which more and more people are doing. All the money that gets added gets turned into a stablecoin, and then you can hold it in the wallet. In about 20 countries now, you can spend it on a debit card, and more countries soon. And then you can withdraw in local currency or into stablecoins. So it is increasingly becoming almost like a bank account too. And of course, you can send to anyone and receive money from anyone on Sling, wherever they are in the world, instantly and for free. So, if you're my favorite network like this is actually like we kind of have a bunch of analytics on this. We have people in Africa who they have family members or friends who go to college in Hungary and Western Europe and the UK and Paterson, New Jersey, whatever, and they can easily send money from Africa to those places around all of those different places. And we have these kind of crazy P2P networks that span continents and tons of countries with people sending money back and forth. And I think in a lot of places that it's like the only universal fast way to move money around like that.
And I think one of the things that is interesting about this is that we talked about Venmo, which is, hyper, local to the US. You talked about faster payments, which is, specific in the UK. But what you guys are doing is actually interconnecting a lot of these domestic systems together. And also you mentioned that you're live in 120 countries. I mean, that's a crazy endeavor for any fintech historically. I mean, you've obviously worked at Monzo as well, so you actually know the fintech side well, but maybe just describe like how you're able to scale globally in that many markets, and like what's still really hard to do, and maybe what's easy, and maybe stablecoins has contributed to making this simple, or it's non-custodial, and maybe we could describe what like non-custodial is in like plain English for folks. But if you can maybe just break down like what does it mean to be live in 120 countries?
Well, the wild thing about blockchains and stablecoins is that at that level, the product is truly global, and you have to actually put work in to restrict where it's available. So we don't want to be available in Venezuela. We don't want to be available in any number of different places that might get you into legal trouble. And so we actually have to put a ton of work in to make the product not work in those countries, as opposed to putting the work in to make it work in lots of places at the core, the self-custodial wallet. I'll talk about what self-custodial is in a moment. So that is almost easy. The hard part is restricting its availability. Then you have to think about the things that if you're moving money around or helping people move money around, what are the things that are localized and difficult? And there you have local payment integrations, so the ability to add money and remove money in all of those countries, and IDV are KYC. Are the really hard parts. The other stuff kind of broadly works around the world. Maybe you have some like SMS deliverability problems for, phone number verification or whatever, but that's the big stuff. And then of course there's also kind of like go to market, like how do you market a product globally? And, it's both a local product and a global product at the same time. So those are the really hard part. Plus fraud. Plus, I can give you a list of 100 things why you have to be absolutely crazy to build a thing like this, but...
We're going to get into all those. Yeah, you mentioned the integration with the local market, so kind of on and off ramps. IDV, identity verification and compliance, and fraud. We're going to talk about that as well. But you mentioned this non-custodial aspect. Maybe you just explain what that means for folks.
Yeah. So basically the way that these kind of distributed ledgers work is that there are, just like in a banking ledger, there are lots of, accounts or wallets or whatever on this ledger, and they're identified in this case by a public key and a private key, a public-private key pair. And self-custodial means that you, Chuk, as the user of Sling, are responsible for your private key. Sling doesn't have access to it, and therefore we cannot move funds on your behalf. We have no control over your wallet whatsoever. And if you decide that you hate us, you can take your wallet and you can move it somewhere else. And there are a variety of ways. We had to do a ton of work to build something which is actually self-custodial. I think there are a lot of systems out there that may claim to be self-custodial, but it's actually very hard to build something where you meet the legal tests and all of the, there are multiple tests in multiple jurisdictions, and we've been through the regulatory ringer in all of those places to, be sure that it qualifies as self-custodial.
What's the common denominator of those tests? What does it mean to be legally self-custodial?
It means that we're not primarily responsible for the safeguarding of your key, and it means that we cannot initiate or complete a money movement on your behalf, like without you being involved. So every single transaction that happens on Sling, there's nuance to this in various ways, right? I want to be careful about the way that we talk about this, but you have to authenticate, you have to biometrically authenticate in order to initiate a money movement. And it just won't work otherwise. We can't do it.
Yeah, that's key. And so I think what's really interesting is the counterintuitive point you made at the beginning, where stablecoins are global, blockchains are global. To make it compliant, you've actually got to work to make it restricted. And so there's the work of identification, there's compliance, and then there's integrations. And one of the things that's really, really still hard when we have this global interoperable ledger is connecting it to the real world, which is the ramps. And you mentioned the integrations with the local payment systems and the ramps. How do you tackle ramp strategy by market? I think theoretically, yes, if you get to a point where there's a big enough opportunity, you spend the dev cost to integrate and work with whichever provider. But that's a lot of different countries. There's so many different ways to approach it, and there's lots of competition happening at the same time. How do you approach it?
Yeah. Well, we spent a lot of time, we started working on this about 3 years ago, maybe even a little bit more now. And, at the time, everybody thought we were crazy. I remember people being like, what are you doing? Nobody says that anymore. But we've been putting in the work to build that infrastructure for a really long time. And we have a mixed model where we are directly regulated in a bunch of places. So we're regulated by the Dutch in Europe, and so we have deep integrations in Europe. We just received our registration for the Financial Contract Authority in the UK, which is a big deal. And I think we were, to our knowledge, and I think their knowledge and our advisors' knowledge, we were the first stablecoin firm authorized in the UK. And then we have a number of US MTLs, but we also have the ability to work with locally regulated partners all over the world. We can kind of plug people in. So, we've just spent years getting regulated in various places, building deep local partnerships. And then, once you build the partnership, the really hard part is actually making it work. You have to have volume flowing through and, find out what is good behavior, what's bad behavior, tune your transaction monitoring rules, have two compliance teams working together or whatever. That again is just like it's a ton. Yeah.
And at the same time, it's pretty interesting because you are abstracting all this complexity away from the user. Like the user does not know it's stablecoins. It does not know it's, these ramp providers and these other different parts of the market. But maybe describe just like on top of this, the abstraction that you're enabling for your users, and what are they seeing and how much of that are you exposing to them as well?
Yeah. We expose a little bit because we need to explain the places where the physics are different. And I think that if you don't do that, you can lose trust pretty quickly. I think there are some people we've taken a different approach than many. So like some companies have built a custodial stablecoin experience, so they actually operate a custodial ledger for everyone. And we have taken the approach of being self-custodial, and we think that is better for a bunch of reasons, but it then exposes kind of like slightly different physics to users than if you're working with a custodial product. And so we expose just enough to explain those edges and help people understand the way the product works. Otherwise, we try to get everything out of their way and just help them do what they're doing, what they want to do. I guess the best way to describe the utility of this is like we have a flow now where you can do a transfer from like an account in one country to an account in another country. It takes 3 taps and, is so fast. I think, the feedback we get on this is ridiculous, but I have UK rails, and for me to move money to Brazil is like 30 seconds into PIX, and includes user experience time. That like includes tapping, entering the amount, and hitting submit, and you can denominate that transaction in whatever currency you want. You can say, I want 100 real to land in my account, or I want 100 pounds worth of real to land, or whatever. We just abstract all of it away and try to make it as simple as possible and get out of the user's way. And I guess as you suggest, like that is a tremendous amount of work and millions of lines of software on the back end, and large teams of partnership people and compliance people and engineers and designers, and making that work so that it seems like a very simple thing.
Yeah, it's one of the tough parts. You've got to balance the UX with the new kind of legal structure you mentioned, which is they have control, and you need to explain that they have control. Folks are used to being protected and making decisions with that assumption. And now you have to manage, okay, well, you technically own the keys. Here's the way you get it out if you need to. Here's how you actually interoperate on chain. What does that even mean? Okay, here's a blockchain. Here's custodial, all in a way that makes it as seamless as if it was actually just a general fintech app. And so that trade-off is tricky, but I think it sounds like you've decided from the beginning on the approach, the kind of pragmatic position of we're going self-custodial, therefore we'll make everything work within that constraint.
Yeah, I think there are, again, a lot of good reasons to do that. I think it's like the native implementation for this technology, and I think that over time many products will work this way with some key backup escrow. There are like lots of things that need to work for this to work, and we have a key backup and like really easy recovery for users that has been audited a ton and doesn't allow us to access the keys, but allows a user to recover the keys. You have to build all of that stuff. I don't think it's sufficient to just give somebody 16 words that they print out, cut into little pieces, and scatter around their house or whatever. You have to like give them something good. But I came across an email I sent somebody like 3.5 years ago when we were thinking about building this. And the pitch was basically just like, stablecoins are really cool. We're going to build the iPod, like the stablecoin iPod. MP3s were really cool too, but you needed to build a really amazing experience around them for that to really work. And that's really what we set out to do.
And I think on that note, I mean, one thing that is interesting about how you're building this, and you're talking about this like cross country transfer, is that you're not talking about how it's done in like the analog fashion around pre-funded accounts or there's a massive opex and operational overhead that comes with just managing and moving money globally. Maybe describe just like what that looks like, because I think a lot of folks are familiar with the Wises and like the other folks of the world, but like what you're doing sounds different. Maybe if you could unpack that further too.
Yeah. I think there are like 6 or 7 different generations of international money transfer that are currently operating today. And I'm not sure that anyone is purely on one generation or another. It's a little bit like if you look at an airline, they're flying, modern 767s or whatever with, that are pressurized to a lower altitude and have a more humid cabin, but they've also got a few 747s. So, you do what you need to do in order to make the thing work, and then you move everything onto the newest possible technology as you can. You have to be pragmatic. But I think Wise did an amazing thing. I love those guys and know them really well, and I think they built a really incredible thing with like these floats in various places and netting off flows as much as they possibly could. I think that broadly what stablecoins increasingly enable, but this is not universally available yet, is like actually moving the money instantly and increasingly doing the FX instantly on chain as well at an incredibly low cost. And that's where everything is going, and that's that's what we've built for, and that is live in a bunch of places, and in some places we have to do it the old Wise way. I don't know how long it will take before everything works that way, the new way, for us or for others. But I think that it's happening a lot faster and to a much greater degree than I would have guessed a couple of years ago. I think it's happening incredibly quickly.
Just to really make that clear, you're saying we're going end to end on chain in different currencies, starting in one wallet in stablecoins, exchanging FX on chain, and then ending up also digital. What parts? When you say it?
Yeah, well, I mean, I do think that thing that you're describing, where there's almost like no fiat endpoint, isn't probably increasingly true. But then you put a Visa card on the stablecoin wallet, and you're still interacting with that financial system. I think it's going to be many, many, many years before these things become beings of pure light in the way that you're describing. So realistically, when we talk, it's from it's from Babylon 5. There's like a race in Babylon 5 that evolved into beings of pure light. They were so, enlightened or whatever. They no longer needed physical presence, but the rest of us still need a physical presence and need to go in and out of fiat sometimes. And so, you end up maybe, bringing fiat in here in country A and then doing an on-chain swap with your transfer. It's like a 2-part transaction or a 3-part transaction on chain that then lands somewhere else that maybe becomes fiat again, but bypasses a float. And, in the places where folks use floats, I think everyone is experiencing that those floats are getting smaller and smaller because you can fund them and move around faster and faster. And maybe one way of thinking about a float, for if there are any software engineers on the call, is it just a cache, so it allows you to kind of make up for other points in the chain that might be slower, and still have a performant product for the end user, right?
Yeah, I mean, that's fascinating. I mean, it points to a world where is a great North Star, but to your point, we have a lot of different parts and pieces to go through now. And I think you're describing like your country by country strategy, and you've also announced Mexico. You've announced there sounds like there's more products that are coming out as well. But maybe just describe like the localization that you're also exploring here, because you're talking about a global product, and maybe describe even like the go to market around it. I mean, showcasing to a Mexico based user that they can now have an account in Mexico, but they can also send to another person overseas. Like we've talked a lot about the product side, but which is fascinating. But at the same time, there's also like a go to market and getting the UX correctly, where it actually works across the board too.
Well, one of my favorite things recently was we started user testing our homepage. This is a while ago now, and we showed it to a bunch of people, and everybody was like, "This sounds great, but I'm not using it," and it took 15 turns on that homepage to get to the point where we showed it to people, and they were like, "This is great. How do I download and sign up now?" And there's like so many different elements to building a product when you're moving money for people, building a product that feels trustworthy and culturally relevant, and approaches people the way that they as they want to be approached and as they think about things, and doesn't feel foreign, especially when you're building something which is global. And we've been through, when we started the company, I think I was incredibly naive, and I thought, oh well, if you give people access to the global financial system really fast and really cheap, it'll just work. Like, that is a global product. I remember talking to investors about it. I was like, yeah, I think this is basically the same everywhere in the world. And if you look at, whatever, if you look at the way that a bank looks in the U.S. versus the UK versus what M-Pesa looks like or what Nubank looks like, they all actually look very, very, very similar. But I think that understates the challenge, and you have to really do a lot of work, country by country, region by region, to speak to people in their language, like literally and figuratively, and build something which is deeply personally relevant, and that requires going to those countries, and it requires talking to people and meeting people and increasingly hiring local teams that are from these regions and know how to build and know how to market locally. And so that that's a journey that we've been on for the last couple of years and is incredibly important to us.
Yeah, I think that's an underappreciated point. Or actually, it depends on what side you are. I think for the range of neobanks that are launching or have launched over the last 2 years, it is a distribution game. Everyone can build a stablecoin app these days. You work with an orchestrator. Many of the API-driven software platforms, and all of a sudden you have virtual bank accounts, your own stablecoin, rails, on-off ramps. And now it's all about finding your niche and distributing locally and globally at the same time, and capturing that right experience and proposition, as you mentioned, with the iterations on the website, the right combination of trustworthiness and relevance and localization. So we've talked about the ramps being really challenging and needing to balance local market expertise and integrations and licenses with working with partners. And then we've talked about the kind of the localization aspect and the challenges there. What about fraud? That's another thing you mentioned earlier. Compliance, IDV, fraud. This is the biggest challenge. It will continue to be a challenge. It's not a technology problem, although I think parts of it are. If we can get all the data to look the same, which is, we can discuss if that's possible or not. But talk to us about what makes compliance in payments challenging.
Well, I remember like it was yesterday, I had a conversation with somebody who asked to help us build our fincrime policy and our program and everything. And, he'd been working in this industry in one way or another in law enforcement and private sector for decades and decades. And he was like, wow, this thing you want to build is like a criminal's dream. And I was like, okay, let's find a way to make it a user's dream and not a criminal's dream, And that's a really hard thing to do, because most of the things that you want to give to users, instant transfers, access to their money at all times, making sure that they have a very high payment success rate, all of those things are also the things that the bad guys want. And so you have to build a system and a team that becomes good at differentiating between the two. And understanding, oh well, that this person and their activity looks good and this one does not. And that that is not a I would love to be able to say, oh, that's just like a machine learning, like, build a classifier and it works, or, that's just a matter of finding people who have, good instinct for this because they've been doing this for a really long time or whatever. But it isn't as simple as either of those things. You need both of those things, and then more. And you also need, there's not just the fraud piece, but there's also the anti-money laundering piece, which is a adjacent and distinct piece, which matters a lot. So, I think this is actually one of the really critical things that you have to get right when you're building a thing like this. And I think if you just build on top of an orchestrator or whatever, and you do all this stuff, you're not in control of your destiny. You don't get to make those decisions in that way. The teams get, talk across purposes, across companies, and all that kind of stuff. Like, I think you need to, like, my belief is you have to build this infrastructure, pretty deeply and pretty well.
Does that become a competitive edge, a unique asset, all that compliance data and information? Can you leverage it in a way that, drives the bottom line, or is it more, reducing costs, or just getting to a baseline that allows you to operate?
On the fraud side, I think that managing fraud that's something that goes directly to your bottom line, right? Like, if you have a lot of fraud, it costs you a lot of money, and if you don't have a lot of fraud, it doesn't cost you much money. There's obviously a dial there and a trade-off with, any kind of controls where you have a false positive rate, you have a false negative rate, true positive, true negative, and you need to improve your precision and recall over time, and obviously everybody wants the trade-off free wins. So there is direct economic benefit to being good at this, and also savings that you can pass on to your users if you're good at it. And again, you can trade off between, at that point, growth and economic benefit, right? Short-term versus long-term greed, if you prefer. But I think that broadly, these things are just required, and there are probably some people in the space who have, well, I don't know, like, I think that you have to invest in these things in order to be able to win and build a long-term viable company. And if you don't invest in these things, you will not be able to do that. So I don't know that I think about it as a competitive advantage. It's just like, I want to build a thing which is, like, valuable for a lot of people over a long period of time, and I don't think you can do that unless you invest in compliance and fraud management.
Do you see AI getting there as well? You mentioned machine learning, but do you see like a swarm of like AI compliance agents who are like detecting aberrations and then going deeper and sending it across each other and constantly? Is that the solution?
I've been building while we've been talking. I've had 5 AI agents, writing PRs for me across our. No, I haven't actually. I've given you my full attention, but I did right before this, for sure. Right.
I've recently gone into Claude Code and Codex. It's insane. If folks are listening, you gotta just try it. I think the gap between people who are using this and not, and my girlfriend is using it as well, and she's not technical, and she's able to just ship things. It's crazy. Maybe we save this for another episode, but I would actually be not surprised if you said, "Hey, I just shipped 3 PRs whilst on this call."
Yeah, well, it would be possible, but I haven't. What I was going to say is, like, when you build something with Claude Code, it's usually pretty good, but Claude Code occasionally screws up and occasionally lies to you. And, like, I was building a thing and it was behaving in a really weird way where you would, like, refresh the page and it would give you different results for each refresh. And I was like, oh, there's a caching problem. And I asked Claude, I was like, hey, I was like, there's something wrong with the cache. I'm not sure you even need a cache. And Claude was like, but I didn't build a cache. And I was like, okay, like, the behavior that I'm seeing implies that you built a cache. Can you please double check? And it kind of sheepishly came back and it was like, yeah, you're right. I built a cache and maybe it's, like, not performing properly. And I was like, just tear it out. You don't need it for this, And so it had gone off and freelanced and, like, built this thing. It's like a, very junior engineer straight out of school being like, oh, I need this thing. And then didn't fess up to it. And so anyway, I like really believe that there is a role for AI in compliance, and we use AI in a bunch of places. You just have to be thoughtful about how you prompt it, how you build it, what your tolerance is for errors, and so I think there are great efficiency gains that can be had. I think there are great improvements in precision that you can have. But you just have to make sure that it's like managed well.
Yeah, and I think a lot of what you're talking about and what we've seen from I think the best builders, like the shared principle that compliance is actually a product and you should treat it like one as well, and you should invest accordingly as well, because fraud and compliance is not unique to stablecoins. Or when I was at Visa, one of my early products was actually building out the fraud systems for banks, and so it's not a very unique problem to like just because stable coins are beings of light that it now creates fraud issues. And so I think that's something that we've seen time and time again. I think overall, I mean, you've talked about, we've talked about a lot of different areas. We've talked about the ramps. We've talked about compliance. We didn't actually talk about the stablecoin itself. Like, what is it? And where I guess like I think you guys use USDP today. Like, how did you think about that decision? That decision framework around: do we work with an existing one? Do we build our own? There's so many different types of ways of approaching it today, but maybe just break that down for us. And like, curious where you are today, and maybe we sprinkle in a little bit of local stable coins also, which we is still like a debate to be had. And I know Chuck's been leading that debate as well.
Yeah, for sure. Yeah, so we use USDP, which is a Paxos product. And the reason we use that is because we developed a really great relationship with Paxos. Chuck, we were talking about that earlier, and Paxos has been incredibly helpful to us in many different ways. And at the time, they really just had USDP and PYUSD, and we didn't want to use a PayPal product, and so we used USDP. We're now also using EuroC in Europe for European users. And we are planning to start transitioning. My wallet runs on USDG. My Sling wallet runs on USDG from the Global Dollar Network. And we will be moving most users over to USDG over the next, I don't know, few weeks. We'll do like a migration, new users first, and then existing users. The reason to use USDG is because it has better liquidity on DEXs and so on. So, it's for users in some ways a better product. At one point, I thought that didn't matter. But I think even though, because we will swap your USDP to USDC for you whenever you want, but I think that people still want to know that their balance is being held in a stablecoin that has liquidity in the broader market. And that's like a safety thing for some people who really know how this stuff works. And so USDG helps us solve that problem.
Yeah, it's like you have two or multiple different types of customers. Some who don't really want to know anything about it. They allow me to pay anywhere, or allow me to collect money anywhere. Fantastic. I'm a freelancer, or I'm paying out a contractor, or I'm sending money around the world. And then you have the folks who are crypto savvy. He says, wait a second, what's the underlying liquidity here? Okay, I prefer to have this thing. Interesting problem to solve.
Okay, I was going to say I was annoyed it was a week or two ago, somebody tweeted about us, and somebody who I know, who I had actually been in a Twitter space with, replied and said, oh, well, be careful with that USDP because, it moves around on Jupiter or whatever. And I replied and I was like, hey, this is one-to-one backed by Paxos. Like, this is ridiculous. We had a whole side conversation about it and he apologized, but I was like, oh, we really need to, that bit is important. And the way that I understand this is that there are this kind of knowledge is a spectrum in the same way that the knowledge about Claude Code is a spectrum. Non-technical people are building stuff with Claude Code. Like, non-crypto people are asking somebody who knows, well, what is this USDP thing? Ooh, you don't know. Okay. So I do think that is important and matters for most people. And, we haven't talked about this yet, but I think that, Raj, you were talking about like stablecoin issuance and all this stuff. And I have not yet formed a full opinion because I think they're very smart people who must know something that I don't. Because I kind of don't get it. Because as a platform, you can get a lot of really good economics from a stablecoin that has a brand name that you recognize and has broad acceptance in the world. If you start making your own stablecoin, you have this compatibility problem. You have the brand name issue. The regulatory situation, I think, is truthfully more complicated. And so I don't see all of the advantage of going in that direction for most people. I can certainly see why JP Morgan would want to do it. I'm not sure why, I don't know, Uber would want to do it, But a lot of smart people who I respect think it's a great idea. And so I feel like I'm probably missing something. What I see, though, is, the era of private money in the United States where, you'd have money from like a bank in Bridgeport, Connecticut, and you'd be in North Carolina and they'd offer you 70 cents on the dollar because it's a long trip and they don't know if the bank still exists or not, and that just seems a little dangerous to me.
Yeah. What are the top ways that you think about it in terms of the priorities? So it's got to be self-custodial. Sure. That's most. Then you mentioned liquidity because of the user spectrum you mentioned. And then what else? I guess there's yield, there's the regulation, and how do you think about the priority of that?
Well, the baseline is it has to be one-to-one fiat backed and regulated by a reputable regulator. NYDFS is great, the feds are great,
But everyone's going to get OCC at some point, right? So that'll be like the base.
Yeah, I mean, you can have a bank for, $500,000 now, Yeah, but it needs to have that. Not every stablecoin has that. And then compatibility is nice, so you don't want to have to build a bunch of smart contracts and swaps and everything for interoperating with the rest of the ecosystem. And brand recognition is nice, and economics are nice.
Yeah, no, I mean, it all makes, I think, especially for your use case, right, and what you're trying to solve for is that it's all about all these decisions add complexity, and I think the more complexity you add, it actually makes it harder for your teams to build that simple experience that you're trying to shoot for as well for your consumers. And so, to your point, let's focus on deep liquidity, brand economics, and then we've got plenty of things to ship that we talked about, from compliance to localization to RAMs to different accounts, and so that makes total sense. But maybe just as we come close to the end here, but we've talked about all the different pieces of Sling and like the origin story, but maybe break down like what comes next. Like what's the vision for Sling? You guys have built a lot of really impressive parts to it, but it feels like you guys are just getting started at the same time too.
Yeah, we are. Our mission is to connect everyone in the world to a global instant financial system at very low cost. And so we've built a lot of the ramps, we've built a lot of the accounts now, we've built a lot of the infrastructure and increasingly battle tested it and got it to the point where it works pretty well. There's obviously a lot more to come. I mean, a financial system is a big thing. It's a very big thing. So, we'll be shipping a bunch of stuff over the next few weeks and the next few months, which will expand our offering pretty substantially. Thanks to we hired like 50 new engineers named Claude just this month. And so, our velocity is just, it's a little awkward that they all have the same name, but it works for us, velocity is through the roof.
And what do you think is the vision, or maybe where do you see the future of banking? And I say that word specifically because you mentioned it earlier that you're essentially building a bank. And I know that maybe it was an offhand comment. I just wanted to kind of pick it back in here and say, what does Sling become? You'll have payments, spend, you'll yield potentially, and then at some point credit, buy now, pay later, mortgages, investing, who knows? But how do you think this financial model evolves as you're connecting all the world through an interoperable layer?
Well, I think that, first of all, I guess it's a very fundamental thing in terms of vision and mission, which is we don't think it should matter where you are. You should be able to access all of those things, freely and easily. And you should be able to take your money with you too. You should be able to pick where you. I was going to say bank, but I don't know what the right word is. Bank has a very specific technical legal meaning. I don't know what these things are. You can kind of like call them a financial technology app or whatever, but they are ways for you to move money around and pay people and buy things and get paid. We normally have called those things banks because for a very long time those are the only kinds of institutions that could do those things. And then kind of in Europe you have e-money institutions and so on. The monopoly that banks continue to enjoy is the ability to lend deposited funds. I think that's appropriate. I worked at a bank before, and I remember having a conversation with a guy who's become a good friend of mine who is a chief risk officer, and we didn't like each other at first. I hope he doesn't mind me, saying that, and we butted heads a lot. And but we ended up becoming friends, and we bonded over a bunch of stuff, and had a wonderful dinner. And he's a great guy. And I remember him saying to me, he was like, lending crises, banking crises have caused so much chaos in the world. They have caused wars. They have caused the collapse of societies and governments. And he was like, and therefore, society has a legitimate interest in regulating lending. And I think that's true. Like, I think that is an unbelievably sound, cogent argument, which is, you can't argue, it's very difficult to argue with facts. And so I think that function of banks, and we can talk about, obviously, that, a bunch of bankers now are warning about, the kind of like shadow lending. There's a lot of corporate debt out there, private debt, that is non-bank. It's a whole different thing. But I think that function of taking deposits from a consumer and lending them out needs to be very closely regulated, and is not something that most of these fintechs can do or should do. And to be honest, at least for now, it's not something that we at Sling want to do. So, yeah, I don't know. We're a money app.
Yeah, I think that it's so true. There's what we think just in general as consumers of banking is, it's where I have my money, I spend and receive and so on. And then there's the definition of, well, you take deposits in a certain way, relying on the users to not pull it out too fast. And then you go loan it out at a fraction with the reserve, and in a very complicated way that has led to these boom and bust cycles. But it also has this kind of second order, third order effect of creating demand and liquidity and investment and growing the economy. And on the one hand, I fully agree. I think banking in that model needs to be regulated because of the incentives, and it will lead to kind of exuberance and loss. But I think with open finance, i.e. the ability for people to get these finance apps into people's pockets, people are going to start developing new models that I'm curious to see can compete. Open question, I'm not sure, but keen to see if that actually happens and start competing on the credit layer as well.
For sure. I think it's just really important. I was talking to a guy the other day who shall remain nameless, who kind of works in this industry, and he was showing me his 15% yield on his vault or whatever. And I was like, what's the risk on that? What kind of principal risk are you taking on that? And he was like none. And I was like, oh, okay, all right. Let's talk, I think there are, and I fully believe in innovation in the space, and I am a huge fan of a lot of these things, and I think that there is going to be a ton of really positive innovation in lending from open finance and all this kind of stuff. But I think there are hundreds, if not thousands, of years of history that we need to learn from. And very shortly after starting this company, we raised our seed round and we put it in Silicon Valley Bank. And my wife and I had basically almost all of our personal money and our investments in First Republic Bank. And we were building a company on top of Solana with USDC at the time. And that was about a month and a half before SVB went under, FRB almost went under, and USDC depegged, which was a brutal weekend. My wife was actually in Jamaica on a surf trip with her friends, and I had the kids myself on that weekend. And I was just trying to figure out what was going on, you know. And look, I mean, that was only a few years ago, and that could have gone much further, and that was the highly regulated banking system. So I think it's just really important to think about what that means for, you know, DeFi and DeFi lending and all that sort of thing. And it might be perfectly safe, but also, you know, history shows us that these things cascade in various ways. And so I think it's just really important to, you know that and be thoughtful about that with your own money and the products that you build, so that when the tide goes out, you and your users are all taken care of.
You know, that's a really, really thoughtful and wise point. I think there's a lot of history to be studied in finance, traditional finance and fintech that does still apply regardless of the technology layer that we're building on. So, Mike, this has been fantastic. Really appreciate you coming on the show.
Totally my pleasure. Thank you so much for having me, both of you. It's great.
And where can folks go to learn more about yourself or Sling?
Sling is at slingmoney.com, SLING money.com. And you can find me at hudack.com, which is weirdly HUDACK. That's a hotel uniform Delta Alpha Charlie Kilo.com. And slingmoney.com.
And you, Raj?
You can find me on LinkedIn at Raj Parekh and then monad.xyz.
And for me, stablecoinblueprint.com and Chuk_XYZ at X and Chuk Okpalugo on LinkedIn. Thank you so much. Good to have you on the show, Mike.
Thanks, guys. Thanks for having me.
Thank you, Mike.
See you guys soon.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.